NVIDIA is on fire, record revenues, exploding demand, sold-out chips. But now there's a new threat creeping into the picture: tariffs. So today we're going deep on a question that's been swirling around Wall Street and Washington. How exposed is NVIDIA to the new U.S. China trade war? Will tariffs derail its momentum? Or is it too important and too resilient to be slowed down? Let's break it down. First, why focus on NVIDIA? Simple, it's the bellwether of the entire semiconductor industry right now. If NVIDIA stumbles, its competitors and suppliers aren't going to shine. And because a huge chunk of NVIDIA's revenue comes from a single product family, it's easier to model the risk. More importantly, NVIDIA is our top pick, and for good reason. Let's walk through why. So what do we know so far? The 10% tariff on Chinese imports is still in place, and it could ramp up to 32% in just 90 days. Now, semiconductors were technically exempt from direct tariffs under the Liberation Day list. But here's the catch: that doesn't really protect NVIDIA. Why? Because most of the cost in a data center GPU system isn't just the chip, it's the whole system. And that's where the tariffs hit. Here's how the math works. Take a card like the B200, made in Taiwan, sold to a US data center. With a 75% gross margin, about 20% of revenue is hardware cost, and that's where the tariff is applied. At 10%, that's a 2% revenue impact. If tariffs hit 32%, that jumps to around 6.5%. Not catastrophic. But not nothing, either. Now here's where it gets tricky: GB200 rack scale systems. These are full-blown supercomputers. And the margins? Way lower. Rack gross margins sit in the mid-single digits, which means almost the entire revenue base is exposed to tariffs. So yes, for GB200s, tariff exposure could be 25% of sales. But, and this is crucial, demand is so strong, and pricing so inelastic, that it likely won't slow orders. Why? Because the market desperately needs inference GPUs right now. Outages at major LLM operators have revealed that inference capacity is tight, and buyers are scrambling to get their hands on anything that runs Blackwell or even Hopper. Here's the good news: a lot of GB200 production is already moving to North America. Foxconn announced plans to build 20,000 GB200 NVL72 servers in Mexico, and that entire capacity could fit in a single facility. ZT Systems, formerly tied to AMD, has US facilities that can support GB200 builds. Even the Bianca cards that power GB200 are now ramping production in Mexico. And under USMCA trade rules, products built in Mexico and shipped into the US are not subject to these tariffs. That means moving final assembly out of Asia into Mexico could effectively neutralize most of the tariff risk, at least for now. Ironically, that setup even disincentivizes reshoring to the US, because if you build it in Mexico, components from Asia like memory, storage, or optics won't get taxed either. Build it in the US? You're paying tax on those imports. But what about semiconductor components themselves? Wafers from TSMC, HBM memory, if those get hit with direct tariffs? Then the numbers change. Assuming 60% of cost of goods is chip and memory, and you've got a 75% margin business, a 32% tariff on that piece equals 5% hit to revenue. Again, manageable for NVIDIA, devastating for companies with lower margins. So far, semis have been exempted, but everyone knows that's not the end. Tariffs could still be applied differently. They might be phased in more gradually, especially since building domestic fabs takes years, not months. Now let's look at what's happening in China. There are reports that China might retaliate by taxing US semiconductors. It's a strange move, considering China's been complaining about lack of access to US chips for 5 years. Also, most chips used in China aren't even made in the US. Intel? Big US capacity, but also has Irish production. TI? Mostly analog, small ticket items, low sensitivity. So for now, retaliation seems more symbolic than truly painful, unless they go after specific multinationals. Now here's something that doesn't get enough attention. Tariffs might not hurt NVIDIA, but export controls definitely can. Right now, NVIDIA can raise prices or pass costs along. But if governments ban sales outright to certain countries, then no amount of demand matters, those sales are gone. And for NVIDIA's Tier 2 markets, that's a growing fear. So what's Wall Street thinking? We've talked to industry insiders, and the vibe is clear: no one's that worried about tariffs. Why? Because Blackwell is sold out. Because every hyperscaler, Amazon, Microsoft, Google, is raising AI capex. Because private AGI startups are raising billions and need inference GPUs. And because, let's be honest, inference demand is real. We're past the hype phase. This is usage. This is utilization. And that's stickier than hype cycles. Is NVIDIA recession-proof? No, and no one should pretend otherwise. If VC funding dries up, if credit conditions tighten, that's where the risk is. Not in consumer demand. Not in tariffs. The weak spot is financing, especially for newer AI startups. But right now, CapEx is still rising, not falling. And until that changes, we think NVIDIA's positioning remains strong. So what should you do with the stock? We're staying bullish. NVIDIA is still our top pick. Tariffs? Manageable. Production? Shifting to Mexico. Pricing power? Intact. Demand? Surging. Sure, export controls and macro risks are real. But that's exactly why the stock trades at a discount to its historical multiple. We think those fears are already in the price. And unless something truly dramatic changes, NVIDIA will lead this cycle, just like it led the last one. Let me know what you think. Are tariffs overblown? Will NVIDIA's Mexico move be enough to sidestep the risks? Or do you think trade policy is going to hit harder than expected? Drop your thoughts in the comments, hit that like button, and subscribe for more deep dives into AI, semis, and what's next in global tech. This isn't just about chips. It's about who owns the future of compute. And right now, that still looks like NVIDIA.